The next smaller chapter, which has no relevance but is there, is called as AMT. Full form is alternate minimum tax. This chapter is basically some section which income tax is trying to beg money from you. Income tax is trying to beg money from you, where this section is basically coming and saying that Rahul, you are ready to pay some taxes. You are ready to pay some taxes, but I'm expecting a little bit more from you. I'm expecting a little bit more from you, worse than girlfriend also. Yes, they're expecting some amount from you, so therefore you end up paying that extra amount. You end up paying that extra amount in a promise that you will get it back in the future. In a promise that you will get it back in the future. This is called as alternate minimum tax. In simple words, I am coming and saying that Rahul, as per the normal provisions of the act, I was liable to pay 100. How much? 100. Government is coming and saying, no, I am expecting 150 from you. I'm expecting 150 from you. You will come and say, okay, I was ready to pay 100. You are expecting 150. I have no choice but to pay 150. So I end up paying 150. Yes or no? Yes. Next year, what happens is I am ready to pay 200. I am ready to pay 200. Government is only expecting 100 from me. Government is only expecting 100 from me. Will I pay 200? No. I will come and say, hey, last year I paid you extra 50. So I will now pay 150 only. I'll now pay 150 only. Yes or no? Yes. Take the second example in a different manner. I'm coming and saying that Rahul, I was ready to pay 200. I was ready to pay 200. Government is expecting 180. How much is government expecting? 180. I am telling boss, I've already paid 50 in the past. I've already paid 50 in the past. So I'm reducing the 50. I'm reducing the 50. But the moment I reduce 50, it will become 150. Government is expecting, which means I have to pay 180. I have to pay 180, which means at any point of time, I cannot go lesser than what government is expecting. At any point of time, I cannot go lesser than what is government expecting, which means I can only pay 180. 200 length 180, meaning 20 I used off. Balance 30 will be carried forward. Again, subsequent year will check. Again, subsequent year will check. What is this mechanism is called as? This mechanism is called as AMT credit. This mechanism is called as AMT credit. In simple words, they're coming and saying the year in which you pay higher taxes than your normal provisions, then the money will become AMT credit. The AMT credit can be utilized in your subsequent years when the normal becomes higher. When the normal becomes higher, subject to the condition that you do not go lower than your AMT tax. You do not go lower than your AMT tax. Rahul, how does this work? Look at the example. Damn slow this is. Look at the example. It comes and says that, boss Rahul, there is a normal tax liability of 2 lakhs. Normal tax liability of 2 lakhs. Expectation of government is 1 lakh 75, which means I will have to pay 2 lakhs. Now, have I paid more? Have I paid less? I've paid more. How much more have I paid? 25. So hold the 25. Hold the 25. Next year, I'm coming and saying I am ready to pay 3 lakh 50. Government is expecting 4 lakh 35. Am I paying more or less? More. How much extra am I paying? 85,000. I already paid 25 in the past. I am now paying extra 85. Total becomes 110. 110. Now, in year 3, I am ready to pay 4 lakh 47. Government is expecting 5 lakh 28. I have to pay 5 lakh 28 because government is expecting more. Government is expecting more. How much extra is the government expecting? 80? 81,000. So 1 lakh 10 plus 81 will become 1 lakh 92. 1 lakh 92. Now, till now, I have paid extra of 1 lakh 92. With me till here? Next. You are in year 4. Year 4, you are ready to pay 5 lakh 11. Government is expecting 3 lakh 56. Government is expecting 3 lakh 56. You will come and say, I will not pay 5 lakh 11 because I already paid 1 lakh 92. Reduce the 1 lakh 92. How much is it coming to? If you reduce 1 lakh 92 from 5 lakh 11, 320? 320. Okay, 3 lakh 20,000. So, if I reduce the whole number, I will end up paying 3 lakh 20. But government wants 3 lakh 56. Can I pay 3 lakh 20? No, I'll have to pay 3 lakh 56. Which means I have not utilized my whole number. I have not utilized my whole number. I still have a pending of 36,000. I still have a pending of 36,000. I was to pay 3 lakh 20. I ended up paying 3 lakh 56. Means 36 is still pending. Yes or no? Yes. Coming to the last second last scenario, I am coming and saying I am ready to pay 5 lakh 78. Government is expecting 5 lakh 35. Will I pay 5 lakh 78? No. Will I pay 5 lakh 78? No, because I also have still 36 pending. I also have 36 pending. How much if I reduce 36? How much will happen? 5 lakh 42. So now I am ready to pay 5 lakh 42. Government is still expecting only 5 lakh 36. I will end up paying 5 lakh 42. I will end up paying 5 lakh 42 because government wants more always. Government wants more always. Now I have ended up paying 5 lakh 42. Do I still have some credit pending? No credits pending. Come to the last year, I am at 6 lakh 12. Government is expecting 6 lakh 1. I will pay 6 lakh 12. I cannot help it. I cannot help it. This is what the provisions are. This is what the provisions are. This provision is called as AMT credit with a set of mechanism. The rule comes and says that if you have an AMT credit, you have to utilize the AMT credit within a period of 15 years. How much? Rahul, I didn't utilize within 15 years. Loss for you. I don't care. Okay, you have to utilize within 15 years. That is what the policy is. Now, Rahul, how to understand how much is government expecting? There is a provision. The provision comes and says, I want 18.5% of the adjusted total income. How much? 18.5% of the adjusted total income. Rahul, what the hell is this adjusted total income? Income tax is coming and saying, boss, take your total income. Take your total income. There are some claims which you have made which is hitting my life. One biggest claim which you made is the 35AD nonsense, which is your specified business. So therefore, remove your specified business. Second, 10AA. You have claimed a big 10AA for me, which is causing a problem for me. Remove that 10AA. Next, any heading C of chapter 6A, which means 80, JJA, QQB, RRB, and RRB. Rahul, these are the three items. But please understand, when I removed my 35AD, it's not like I am not eligible for anything. What is that coming and selling? They're coming and saying they have a problem with my deduction. They don't have a problem for me to consider it as a normal business. So I will assume it as a normal business. If I would have done it as a normal business, I would have got depreciation. So therefore, they're coming and saying, do one thing, boss, you disallow the whole deduction. You allow the revenue expense. From a capital expense perspective, you allow depreciation. If you do that for me, you will automatically find something called as adjusted total income. You take this adjusted total income, you multiply by 18.5%, you will automatically get what the government is expecting. You will find out what the government is expecting. This is what your AMT tax is. Compare with your normal tax, whichever is higher. Yes or no? Now, because this provision is not very friendly to me, 115 BSc came and said, boss, if you are opting for 115 BSc, get loss don't require. Which means if you are opting for 115 BSc, AMT tax not to be checked. That is why if you notice in step number 9, it is actual or AMT, whichever is higher. That is compared with normal, that is compared with 115 BSc, whichever is lower. Yes or no? Rahul, how does this work? Let's take an example. I'm going to put my normal. I'm going to put my AMT. I'm going to put my EU. Okay, tell me what happens. I have my normal. I have my AMT. I have my 115 BSc. I'll give you numbers, you tell me what is happening. Okay, which one you have to pay. In normal it is 100. In AMT it is 200. In 115 BSc it is 150. You tell me which one you want to pay. You have to pay 150. Why, Rahul? A normal or AMT, whichever is higher. That will be compared to the 115 BSc, whichever is lower. Yes or no? Yes. Next, Rahul, I have 100, 150, 200, 150. Okay, Purida. Yes. Rahul, I have 150, 100, 200, 150. Rahul, I have 150, 200, 100, 100. Clear? Yes, be careful about this. This is what your provisions will look like. Any doubts? No? Great. Now, Rahul, when is my AMT applicable? AMT is applicable only if you have an income more than 20 lakhs. The adjusted total income should be more than 20 lakhs. Then only they are looking for these conditions. Otherwise, they are not looking for these conditions. How do you check, Rahul? In simple words, in exam go, check if you have 10AA, 35AD or heading C. or heading C. In that case, try out AMT and check. Try out AMT and check. If it goes more, then you'll do it. If it doesn't go more, ignore it off. Then you ignore it off. The one and the most important thing to be remembered in AMT is 18.5% is on the full adjusted total income. Is on the full adjusted total income, which means I don't care what this adjusted total income comprises of. It may comprise of capital gains, winnings, unexplained income, PGBP, salaries, doesn't matter. Doesn't matter. All of the income is liable for 18.5%. All of the income is liable for 18.5%. I do not go and split here. I do not go and split here. I will not come and say capital gains 20%, balance 18.5, nothing. Nothing. I will take the whole of the income and do 18.5%. I'll do the whole of the income and do 18.5%. With me till here? Yes, great. This marks the end of your chapter called as AMT. If you completed AMT, what is pending now? What is pending? You have return filing, advance tax, TDS. Yes, but on a sum level, everything is done. On a sum level, everything is done. Yes or no? Yes. Anyone, any doubts? On a sum level, do you understand what is happening? Yes. When you go for an exam hall, when you see an adjustment, please note that this adjustment may not be from one chapter alone. It may be from multiple chapters. It may be from multiple chapters. Unless you have a clear cut understanding of every chapter, numbers will not come out right. Numbers will not come out right. You may think that this is from one chapter, but it may hit you very hard. It may hit you very hard. That is where you have to be careful. That is where you have to be careful. Like I told you, if you are receiving a gift from a spouse to wife, husband to wife, if you are receiving a gift from a husband to wife, many places will come. Many places will come. First, IFOS. Second, clubbing. Third, capital gains transfer. Capital gains transfer. Yes, all the three are important. All the three are important. Touch edume aglana ellame gali. Yes or no? Yes. So please be extremely careful. Any one small item can take a toll on you. Can take a toll on you. ICI will not, in MCQ level at least, give you straightforward questions. If they're giving you a question and you try using calculator and if it's coming out in a single shot, it means something is wrong. Please understand. Please understand. It is not that way. It is not that way. If you open up a question, now when I say sure shot, doesn't mean that the first time right on the channel, adana doubt on the chapter. I mean that you open up a calculator and you see that the numbers and you feel like, oh, okay, we have to directly do a slab rate income. No. Then something is wrong. Then something is wrong. If they're giving you an MCQ where they're expecting you to find out tax rate because it is just a number, that means you have missed out something. It may either be marginal relief, or it may be 115 BSc, or it may be partial integration. Can be anything. Can be anything. Take a second, be open mind on what you're discussing about, and then write the answer clearly. Yes or no? Yes. When you have 4 options, just because you see one option matching with your number, don't jump and tick off the answer. There may be other options which are important. You might have noticed from the test we did in the class also. Answer vera mari varum. Yes or no? Yes, please be extremely careful. How do you prepare for all this, Rahul? Simple. Do test. Do test. Doing sums and all you can keep doing lifelong also, but you'll never do anything with that. Okay, because you're just doing the same sums again and again. When the more and more you do test, the more and more your mind become blanks. The more and more the mind become blank, you start working on it. Simple. Yes or no? Yes, keep that in mind. Let's go forward to the multiple chapters. The first chapter is your payment of taxes. The first chapter is your payment of taxes. In payment of taxes, there's not much to discuss. The one thing which is very simple to discuss is that you have multiple taxes. One tax is your TDS. The other tax is your advance tax. The third tax is your self-assessment tax. And the final tax is your final level portion within foreign tax credit. Final level portion with a foreign tax credit. Now, when it comes to your advance tax simply comes and says that if you are having an income, I expect you to pay some tax during the previous year. During what year? Previous year. Rahul, how do I find out what is my advance tax liability? Simple. Take out your total tax liability, reduce your TDS which is deducted. TDS which is mandatory. TDS should be deducted, not estimated. TDS should be deducted, not estimated. If you remove that number, you will find out something called as advance tax. You'll find out something called as advance tax. This advance tax, if it goes more than 10,000 rupees, more than 10,000 rupees, income tax is asking you, then you have to pay tax on that as an advance tax. Rahul, it is not going more than 10,000 rupees. What to do? You can choose to let it go. You can choose to let it go, pay it as self-assessment tax. You can pay it as self-assessment tax. Yes, if the advance tax is going more than 10,000, you have to pay it as advance tax. If the advance tax is going less than 10,000, you can pay it as self-assessment tax. Clear? Yes. Now, how to pay this advance tax, Rahul? They have given you 4 quarters. They've given you 4 quarters. 15th June, September, December, March. 15th June, 15th September, 15th December, 15th March. 15th June you have to pay minimum 15%. 15th June, 15th September you have to pay minimum 45%. When I say minimum 45%, including that 15. Including that 15. If you are not there on 15th September, 15th December you have to pay 75%. If that is also not happening, you have to pay 100% by 15th March. You have to pay it by 15th March. This is what your advance tax obligations are. Now, this advance tax obligations may not be applicable for a resident senior citizen not having PGBP income. Not having PGBP income. This is what the criteria are, which means two people are not liable to pay advance tax. One, tax is less than 10,000. Tax is less than 10,000. Second is resident senior citizen not having PGBP income. These two people are not liable to pay advance tax. They can also pay self-assessment tax and close it off. But other people are mandated to pay advance tax in 4-quarter installments. With an exception that if you are following 44 AD presumptive and 44 ADA professional presumptive, you only have to pay 15th March. You only have to pay 15th March. You don't have to pay any other one. You don't have to pay any other one. Rahul, what the hell will go wrong if I don't pay this? What the hell will go wrong if I don't pay this? I will have to pay now something called as interest under section 234C. Under section 234C, this 234C comes and says that, boss, for every quarter which I am telling you to pay the money genuinely. Pay the money genuinely. If you don't pay the money on time, I will levy interest at the rate of 1% for the next 3 months. 1% for the next 3 months. Rahul, 15th June I made a payment, but it was less. 16th June I made the balance payment. Can I do interest only for 1 month? No. It will become advance tax of next quarter. It will become advance tax of next quarter, which means you will be liable for 3 months. You will be liable for 3 months, which means quarter 1 order default interest is 3 months. Quarter 2 order default interest is 3 months. Quarter 3 order default interest is 3 months. Quarter 4 order default interest is 1 month. That is what the rules are. That is what the rules are. In this, they are giving you some benefits. In this, they are giving you some benefit. The benefit is in quarter 1, if you are liable to pay 15%, no problem. No problem. At least pay 12%. How much? At least pay 12%. Rahul, I paid 13%. Interest is 0. Rahul, I paid 11%. Interest will be on 4% fully. 12% is a threshold check. 12% is a threshold check. If I don't satisfy the 12%, the shortfall fully will be liable for interest. The shortfall fully will be liable for interest, which means if I have paid only 11% of the advance tax, whereas I was supposed to pay 15%, income tax will come and say you did not pay 12, which means your shortfall is 4%. On that 4% ke mala 3% interest. 4% ke mala 3% interest, mandatory rule. Mandatory rule. Yes or no? Yes. This is for quarter 1. 15 becomes 12. Quarter 2, 45 becomes 36. How much? 45 becomes 36. 45 becomes 36, which means you pay bare minimum 36, no problem for you. You don't pay 36, 45 in the shortfall compute agum. 45 in the shortfall compute agum. Around third one, 75 will become 75, fourth one 100 will be 100. Fourth one 100 will be 100. No changes in that. No changes in. Yes or no? Yes. Yes. Now, when it comes to interest, income tax is coming and saying that, boss, there are certain incomes which I know can be a problematic area. I know you cannot estimate these incomes from the first day itself, which means I then cannot expect you to pay interest from the first day itself. So let me come and allow you to pay interest only from the date on, let me allow you to pay advance tax only from the quarter in which you earned it. What are the 4 incomes? Dividend income, winnings, capital gains, business income earned for the first time. How much? Dividend, capital gains, winnings, business earned for the first time. These are the 4 kind of cases where I am coming and telling no problem. I don't want advance tax from the first quarter itself. You can pay advance tax from the quarter in which you started earning. Rahul, I started earning this income only from 20th March. Doesn't matter, don't pay. 31st March kulla pay pannadu. I will not levy a single 234C on you. Because quarter 4 is already over. At the same time, please understand, just because 15th March has been given a due date does not mean that 16 to 31st whatever is paid is called as delayed payment. That is also advance tax only. That is also advance tax only. Just that for the purpose of 234C, you will stop on 15th March itself. What? For the purpose of 234C, 15th March will be the head point. But if you still pay on 16th, 31st, it will still be called as advance tax. Why, Rahul? Because 234B will not come then. 234B will not come. Yes or no? Yes, this is what the provisions are. Any doubts? No. Now, if you have computed advance tax, next comes after advance tax as 234B, because now you are going to pay something called as self-assessment tax. Income tax is coming and saying, boss, you made some delay in your quarterly payments. You made some delay in your quarterly payments. No problem. Forget it. At least ensure that you paid before 31st March. At least ensure you paid before 31st March. If you ensure that the whole of the payment is made before 31st March, I will let you go. If not, I will now levy something called as 234B from 1st April of assessment year. From 1st April of assessment year till the date on which you make the payment. Till the date on which you make the payment. Now, from 1st April of assessment year, interest will only be levied at the rate of 1% per month or part thereof, provided you have not paid 90% of advance tax also. 90% of advance tax also. Rahul, I have paid 92%, no interest. Rahul, I have paid 89%. Interest on the whole 11%. Interest on the whole 11% will start at 1%. Again, 90% is a checkpoint. 90% is a checkpoint. You satisfy the 90%, no interest. You don't satisfy interest on everything. Interest on everything. Now, when you are doing the computation of interest, the rules simply come and say that if you end up paying self-assessment later on, that day you can start reducing your interest. But how does the self-assessment tax be paid off? Self-assessment tax paid will first be adjusted against my late filing fee. Then it will be adjusted against my interest. Then it will be adjusted against my tax. Which means the last priority will be given to tax. Whatever you adjust from your tax, balance tax is what you will start paying interest for the next months. Yes or no? And please understand, it is 1% per month or part thereof. 1% per month or part thereof, with a silent adjustment in this chapter which comes and says that whenever you want to compute interest, the tax which you have should be rounded down to the nearest 100. Which means they are coming and saying that, Rahul, my tax was showing as 12,900. I will levy interest on 12,000. Rahul, 900 rounded off panno illa. It's rounded down. Rahul, this is 12,100. Same 12,000. It is always rounded down. Only for the purpose of interest calculation. The moment you complete your interest calculation, forget off and come back to your tax. Where you have the rule of rounding off total tax as 10. Where you have the concept of rounding off your total tax to nearest 10. Yes or no? Yes. Perfect. This marks the end of your chapter called as payment of taxes. அதான் சொன்னேன். Achha, 12,900 is 12,900. Sorry. What is 12,100? What is 12,198? 12,000. Number adhigama potta vera onnilla. Yes, this is what the provisions are. Can we go forward? Yes, perfect. Completing your payment of taxes leaves us with two small chapters called as one small chapter and one big chapter called as return filing and TDS TCS. Yes. In return filing, what I'm going to do is I'm going to discuss the provisions with one small amendment. So pay focus on the amendments. The first is your return filing. Now this chapter comes and says that, boss, any person who is computing your taxes is liable to file returns. When are you becoming liable to file returns? First of all, if you're a firm or a company, mandatory return filing. Who are you? Firm or a company, mandatory return filing. If you're any other person who's in the slab rate model, income tax comes and says your GTI, your GTI ignoring your capital gain exemptions. Is showing more than basic exemption limit. What? Your GTI, ignoring your capital gain exemptions, is showing more than basic exemption limit, which means you don't take your total income, you don't take your gross total income, you take gross total income, removing your capital gain exemptions. Removing your capital gain exemption, that should show less than basic exemption limit. What is your basic exemption limit, Rahul? 2.5 for normal, 3 for senior not opting for 115 BSc, 5 for senior not opting for 115 BSc, super senior not opting for 115 BSc. Yes or no? Yes. This is what the primary conditions are. This is what the primary conditions are. But beyond this, income tax now comes and tells that I am also giving you certain criteria and rules basis which I want you to file a return. Basis which I want you to file a return. Now here I don't care what your income is, I don't care what your tax is. You have satisfied the condition, so you have to file a return. You have satisfied the condition, you have to file a return. First condition, they're coming and saying in current account you deposited more than 1 crore. How much have you deposited? In current account you have deposited more than 1 crore. I want you to file a return. I don't care what you have done. I don't care what you have done. Second, I'm coming and saying you have deposited more than 50 lakhs in savings account. How much? 1 crore in current, 50 lakhs in savings. Yes. Then I'm coming and saying you have incurred more than 2 lakh rupees in electricity. How much? 1 lakh in electricity. You have incurred more than 1 lakh in electricity, or you have incurred more than 2 lakhs for foreign travel. 1 lakh for electricity and 2 lakhs for foreign travel. Now please understand, I am coming and telling that you have incurred this. You have incurred this. I am not bothered who traveled. I am bothered who incurred. I am bothered who incurred, which means if I have made the payment for the foreign travel for my daughter to travel and come, I am filing the return. Daughter is not filing the return. Daughter is not filing the return. It is more important as to who is paying the money. It is not important who is traveling with the money. Yes. So it is 2 lakhs paid for foreign travel by me. I file the return. I file the return. It is 1 lakh of electricity payment done by me. So I file the return. Yes or no? Yes. Then they're giving some additional conditions where they're coming and saying your total sales from business is more than 60 lakhs. Your total gross receipts from profession is more than 10 lakhs. If you have a TDS or TCS showing in your account as more than 50,000 for resident senior, more than 25,000 for others. Rahul, you satisfy any of these conditions, do you have to file a return mandatory? Yes, you have to file a return mandatory. It doesn't matter what your income is, it doesn't matter what your tax is. Rahul, this is also not happening. This is also not happening. I am an ROR. Who am I? I am an ROR. I am an ROR. I have foreign assets outside India. I have foreign assets outside India. Mandatory return filing for you. Mandatory return filing for you. If I found out to be a beneficial owner of an asset outside India, then I have to file a return in India. If I am found out to be a person having signing authority in any foreign bank, then also I have to file a return in India. If I am not the owner, I am the beneficiary, which means someone else is the owner, I am the beneficiary. In that case also I have to file a return. In that case also I have to file a return, but anyone only has to file it. Anyone also has to file it. If the owner is filing the return, beneficiary is not required. If beneficiary is filing the return, owner is not required. Owner is not required. This is your basic conditions for filing return. This is your basic conditions for filing return. Yes or no? Yes. Now in these conditions also they are coming and saying if you want to file a return, when should you file a return? They are coming and saying you normally should file a return on 31st October. You normally should file it on 31st October. If you are not liable for audit, it is 31st July. If you are opting for presumptive, it is 31st July. Okay. Normally it is 31st October from your exam perspective. From your exam perspective, because if you are not having 31st July, then it is presumptive. If you are having 31st July, then you are presumptive. Generally that will not happen. Generally that will not happen. So therefore they are coming and saying, boss, 31st October is a normal due date. But if at all you are not liable for audit, which means you are in salary case. You are in salary case. Or if you are not, if you are opting for presumptive, then in that case you have to go for 31st July. Otherwise it is always 31st October. That is what the rules are. That is what the rules are. At the same time, they are coming and saying, boss, if the firm is liable for audit, the firm will file it on 31st October. If the firm is filing on 31st October, the partner will also have to file on 31st October. The partner will also have to file on 31st October because partner will not know his income or salary unless and until the partnership firm completes their return. Unless and until the partnership firm completes their return. Yes or no? Yes or no? Now, in this scenario, they are also coming and saying that, boss, if you want to file a return on time, you have to file a return within thus due dates. Within this due dates. Assuming you made a mistake in the return. What did you do? You made a mistake in the return. No problem. You can file a revised return. You made a mistake in the return, which means you can file a revised return. Rahul, when can I file a revised return? You can file it by the December of that AY. You can file it till the December of that AY, which means 31st July, 31st October is there. If you have made mistake, you can file it till 31st December. Rahul, I've made a mistake in the return I filed. Again, file a revised return, no problem. But you can only do it up to 31st December. Which means until 31st December, how many ever times you want to change, you keep changing. No one cares. No one cares. Rahul, I completely forgot to file the return itself. I can file a belated return. I can file a belated return. Rahul, what is the due date for filing belated return? Same 31st December. Same 31st December. Rahul, I filed a belated return. Adla mistake irukku. No problem. Belated return can be revised. Belated return can be revised. It doesn't mean that the revised return will become original return. It will still be considered as a belated return. The revised return will just replace the original return. The revised return will simply replace the original return, which means if the original return was filed on time, revised return is also filed on time. If the revised return was filed belated, if the original return was filed belated, revised return is also filed belated. Yes or no? Rahul, I filed belated return. What is the problem? What is the problem? First problem, no loss. Second problem, no heading C. Third problem, I now have a late filing fee. I now have a late filing fee. Income tax comes and says that, boss, if you have not filed your return on time, you now have to pay me late filing fees of 5,000 rupees. You now have to file me late filing fees of 5,000 rupees. But if I find out that you are a poor person eligible for rebate, meaning your total income is less than 5 lakhs. Your total income is less than 5 lakhs. Your late filing fee will become 1,000 rupees. Your late filing fee will become 1,000 rupees. The first mistake, I told you loss is not eligible, deduction not eligible, late filing fee. The last item which will happen is something called as 234A. 234A. What is this 234A, Rahul? They're coming and saying, boss, if you have a tax payable, what do you have? If you have a tax payable and you have not filed a return on time, from the time when you have not filed the return till the time you file your return, I will now levy an extra interest called as 234A at the rate of 1% from the period after the due date. Till the date of filing the return. What will I levy this 1% on, Rahul? 1% will be levied on the amount which is pending on the due date. In simple terms, take my total tax, reduce my TDS, reduce my advance tax, reduce my self-assessment paid up to due date. Number which will come to you, adukku mele 1% for the period after the due date till the return is filed. Hey Rahul, 234B will stop on. No, 234B will also continue. Until the time you make the final tax payment. This is called as 234. So when it comes to belated return, you have 4 compliances to follow. One, loss of deduction, payment of late filing fee, payment of interest. With me? Next. Yes. Now I have filed my return. Either I filed it belated or I filed revised. The returns which I filed, department is not happy. Because there is a mistake in the return. He will issue me something called as defective return notice. The moment he issues me a defective return notice, I have to respond within 15 days. Rahul, I did not respond within 15 days. It will be deemed that the return is not filed. Rahul, I found the mistake in 15 days, I rectified it. No problem, return will become valid. This is called as defective returns. Rahul, now I have filed an original return, revised return, belated return, defective return. Who will verify all these returns, Rahul? The returns will be verified by the assessee. First, you verify panno return. Yes, who can verify, Rahul? If it's an individual, return will be verified by assessee himself. Rahul, assessee is unsound mind. Guardian. Assessee is a non-resident. The agent who is appointed in India. Yes or no? Assessee is minor. Guardian, again guardian. Yes. Rahul, assessee is Karta. Assessee is HUF. Karta not available. Any other? What is senior na 60 Kamalaya? Any other non-minor? Senior na 60 poidoma. Okay, any other non-minor? Rahul, it's a company. MD not available. Any director? Rahul, foreign company. Agent agent. Rahul, firm. Any active partner. Any non-minor partner. Any non-minor partner. Rahul, it's an LLP. Designated partner. Rahul, designated partner not available. Any other partner? Any other partner? Yes or no? Yes. Rahul, it's a local authority. Principal officer. Rahul, it's a trust. Sorry, not trust. Political party. CEO. Yes, some examples like this and there. Some examples like this and there. At any point of time, if you found out that the company is liquidated or something like that, then liquidator will file it. Then liquidator will file it. Yes or no? Yaar disturb pandra. Yes, you have a return, original return, revised return, defective return, then you have the authority persons. Then you also have something called as TRP. Who is it? Tax return preparer. They have come and said that, boss, if you are not able to prepare your own return, you can also bring in someone else for preparing your return, which is called as TRP. This TRP generally should not be an employee of the company, should not be a bank person, should not be a qualified CA. Should not be a qualified CA, can be a semi-qualified CA. You all can do it after you pass inter. After you pass inter. Okay. Inter pass panadhukku appuram paapom. Foundation not eligible. Foundation is not eligible. Okay. You can also do it after you pass inter, not foundation. Until you qualify. After you qualify, then you cannot do it. Okay. After you qualify, then you will get more money for reviewing return. You'll get more money for reviewing return. Yes or no? Yes, this is a TRP case. They're coming and saying, boss, if you have not to file your original return through a TRP, revised return cannot be filed through a TRP. If you are a person who's liable for audit, then also TRP not eligible. Then also TRP not eligible. This is what the TRP conditions are. What else is pending in this chapter? And that is an amendment. After that, you have PAN conditions and all. You have PAN conditions and all. They are coming. You have PAN conditions and all, where they have come and said that, boss, you have to generally get a PAN for yourself. You have to generally get a PAN for yourself. Some conditions are given to you. Some conditions are given to you. You have been given some conditions and all. Generally, you have to get your PAN within 31st May of that following year. 31st May of the following year, and in some amendments of the current year where you have some deposits and all made, bank deposits and all made, you have to get it within 7 days. You have to get it within 7 days. So yes, you have a PAN condition and everything, where they're basically coming and saying that, boss, whenever you have a requirement to get a PAN, the requirement has to be satisfied. Some 31st May conditions are there, 7 days conditions are there. You can ignore all those. Nothing comes in exam. The amendment is only that last 3 parts, some current account deposit and all those things, where you have to get it within 7 days. You have to get it within 7 days. Vanda ada MCQ mari varum. Yes. Apart from that, they have also come and told, if you have a PAN, you have to quote it in some places. You have to quote it in some places. Some list of some 25 items, something are there. Not so important from exam perspective. Okay. It has come in exam. I'm not denying that it has come in exam, but it has come in the last question, the theory part of the question. Okay. So if you are not able to answer any other question, then only that comes in your rescue. Generally, if you are my student and you are aware about the other questions, you don't have to worry about the last question. Okay. So my recommendation, you can ignore it and go. You can ignore it and go. Vandalo maximum 4 marks. You cannot take a chance. I mean, you can take a chance. It's okay. Because there's too much to remember. There are some numbers of 2 lakhs, 1 lakh, 50 lakhs and all. Too much numbers are there. Too much to remember also will not help you right now. Okay. So you can ignore those conditions and go. The last part of the chapter talks about Aadhaar and PAN linking. Aadhaar and PAN linking. But they're basically coming and saying that, boss, if you have an Aadhaar and you have a PAN, the Aadhaar should be linked to your PAN. The last date was given as 31st March 2022. The last date was given as 31st March 2022, where they came and said that, boss, 31st March 2022, Kula, you should have linked your Aadhaar with PAN. But now recently extensions have come in, which means your book would have shown some other extension date. September. They have now put a September 30th order condition to link your Aadhaar and PAN. But they came and said, boss, it doesn't matter. It doesn't matter. 31st March, 1st April, and they started levying something called as late filing fee. They started levying something called as late filing fee for the first quarter, which means April, May, and June. They levied a late filing fee of 500. After June, it became 1000. After June, it became 1000. But they extended the due date to 30th September. They extended the due date to 30th September, which means they came and said, boss, late filing fees will apply on you. Late filing fees will apply on you. But 30th September, I will not penalize you for it. I will not penalize you for it. What do you mean by penalize, Rahul? They're coming and saying that if I ask you to link your Aadhaar with PAN, I want you to link your Aadhaar with PAN. Rahul, I didn't link my Aadhaar with PAN. What will happen? My PAN will become inactive. My PAN will become inactive. If my PAN becomes inactive, it's as good as I don't have a PAN. It is as good as I don't have a PAN, which means if at all they want to levy a penalty on me, they can levy a penalty on me. That is what the rules are. That is what the rules are. That due date was extended to 30th September. Now it is, I think, 31st March 23 also, so no one cares about it. Okay, but the late filing fee is still there, which means first quarter it is 500, next quarter length it is 1000, next quarter length it is 1000. Understand, it is 500 flat fee, it is not 500 per day and all. No one is going to pay so much. Okay, and along with the condition saying that if you are not having an Aadhaar, then it's okay, because 3 people are not required to have an Aadhaar. One person is a non-resident, the other person is a Jammu and Kashmir person, the third person is a senior citizen more than 80 years of age. Senior citizen more than 80 years of age, Jammu and Kashmir person, 80 years of age person, and non-resident person not required to have an Aadhaar, which means linking of Aadhaar and PAN is not required. Linking an Aadhaar and PAN is not required. அது சொல்றதுக்கு தான் இருக்கு. ஆனா practical world போய் பார்த்தா எல்லா non-resident க்கு hold பண்ணி வச்சிருக்காங்க. They're bloody coming and saying get an Aadhaar in India. He's like, I'm not even a citizen of India. He's like, I don't care. They want everyone to become Indians now suddenly. Okay, நாளைக்கு Barack Obama will come to India and they'll be like, get Aadhaar for you first. அதுக்கப்புறம் தான் வேலை கொடுப்பாங்க. Yes. Anyway, the point is, this is what your return filing conditions are. This is what your return filing conditions are with the current year and the most important amendment for the current year called as updated return. The current year amendment called as updated return. Rahul, what the hell is this updated return? The provisions are coming and saying that, boss, if I find out that you have a return where you have tried to disclose wrong information so that you can avoid taxes, tomorrow if I catch hold of you, who am I? Assessing officer. Tomorrow if the assessing officer catches hold of you, he will also levy something called as penalty. He'll also levy something called as penalty. If you feel like you don't want to pay the penalty right away, you can itself pay the interest and tax right away. You can itself pay the interest and tax right away in the form of something called as updated return, which means this section has been brought in only for the benefit of department, has not been brought in for the benefit of assessing. The provisions come and say that, boss, if you have found a return where you feel like you have made some mistakes, I'm giving you 2 more years. How many more years? 2 more years. 24 months from the end of your assessment year. From the end of your assessment year. Understand, no? 31st December, your revised return will stop. Until in the 3 more months, your assessment year will stop. Until in the 24 months. Until in the 24 months, I will give you some more time for you to file an updated return. I will ask you to file an updated return, but they have also put some conditions. They have come and said, but updated return, everyone cannot file. Everyone cannot file. To the people who cannot file updated return, first person, if you are not going to give me benefit, who am I? Assessing officer. Assessing officer. Why will I not give you benefit? Because I'm not going to pay extra tax. I'm not going to pay extra tax. In simple words, they're coming and saying updated return cannot be filed unless the return ends up in a tax payable scenario. Unless the return ends up in a tax payable scenario, which means, Rahul, I should have an income should become more income. Rahul, income is becoming less income, not allowed. Rahul, loss is becoming less loss, not allowed. Rahul, loss is becoming income, allowed. Yes or no? Yes, your income should end up becoming a tax payable. Next, they're coming and saying, boss, if I catch hold of you and I've already put an assessment on you, which means now I itself caught hold of you. When I have caught hold of you, I will ask you for penalty only, because now you try to file return after I pushed you. Had I not caught hold of you, you would have not filed the return, so therefore not eligible. Therefore not eligible. This is what they came and said. This is what they came and said. You should end up in a tax payable scenario. I should not catch you for assessment. I should not catch you for assessment. If that is the conditions being satisfied, you can file an updated return. But the rule is, once you file an updated return, one more time you cannot revise it. Nee kurtha the final return. Nee kurtha the final return. One updated return once in lifetime. That's all. For that assessment year. For that assessment year, you can file one updated return. Yes or no? Yes or no? At the same time, I'm also coming and telling that, Rahul, if at all I have filed an updated return for 1 year, because of which my loss has become an income. My loss has become an income. If my loss has become an income, loss குறைஞ்சிச்சு. அந்த loss நான் ஃபியூச்சர்ல போய் செட் ஆஃப் பண்ணிருப்பேன். அந்த வருஷத்துக்கு நான் ரிட்டர்ன் ஃபைல் பண்ணிட்டு அந்த வருஷத்துக்கு நான் அப்டேட்டட் ரிட்டர்ன் ஃபைல் பண்ணனும். Yes, in simple words, let's say I have done for 2021, I filed an original return with 5 lakhs loss. This 5 lakhs loss I claimed in 21-22. Now 2021 I filed updated return, made the 5 lakhs losses an income of 10 lakhs. Is the loss eligible for me? Is the loss eligible for me? No, but I have used it off in 21-22. So what I will have to do now? For 21-22, I'll have to file an updated return. So which means I have to file updated return for both the years. In 2021 also I have to file an updated return. 21-22 also I have to file an updated return so that I can remove the loss. I can remove the loss, make my income more, pay tax more. Pay tax more. Yes or no? Yes or no? Now, here is where they put a hard stop. They came and said, Rahul, you have cheated me already. You have cheated me already, but still I'm giving you a time. Still I'm giving you a time. Suma koduk mata. The provisions come and say that, boss, if you try to file an updated return, what are you trying to do? You're trying to file an updated return. If you try to file that updated return within 1 year from the end of the assessment year, within 1 year from the end of the assessment year, you have to pay the tax which is eligible. You have to pay the interest also which is eligible, but I want 150% of that. I want 125% of that. How much? So you have to compute the extra tax, you have to compute the extra interest, add both, multiply by 125%. That is what I want from you. Which means don't pay penalty, that's okay, but pay 125%. Adhukku na penalty pay pannala. Yes or no? Yes. Then they're coming and saying, no, Rahul, you actually filed it after 1 year. After 1 year of what? Assessment year, which means you filed it in the last leg. And the 1 year later, 2 years before. 1 year later, 2 years before. And the leg file panna, I want 150% of the tax payable and interest payable. 150% of the tax payable and interest payable. This is what the provisions are. Where the updated return results in an additional tax payable, they shall be discharged as follows. If the updated return is filed after the due date of belated return or revised return and is filed before the 12 months from the end of the subject assessment year, you have to pay me an additional 25% of the additional tax and interest. Kudukkarde kudukano, adu thavare 25% extra tharano. Then after 12 months if you are filing it, you want to pay 50% of the additional tax and interest, which means 150% of the number has to go. 150% of the number has to go. Rahul, how to compute extra tax? You compute tax as per the updated return. You compute tax as per the return you paid. Minus of those two will become additional tax. Minus of those two will become additional tax. How do you compute additional interest, Rahul? You compute the tax, you compute interest on the normal tax, corrected tax basically. You compute interest on the corrected tax. You compute interest on the old tax. Difference of that will become additional interest. Difference of that will become additional interest. That is what your additional interest, that is what your additional tax. Adhik mala 25, adhik mala 50. Adhik mala 25 or 50. The only thing which is to be kept in mind is, please understand, updated return can also be filed by that SSC who has not filed the return at all. Which means, original file panla, belated file panla. Didina directa updated return file pannar. In that scenario, what will happen? 234A for him will be applicable. Will be applicable from when? From the original due date till the updated return due date. From what date? Original due date till the updated return due date. Rahul, the assessee filed a return. The assessee filed a return. Now he is trying to update return. Will 234A apply? No. Then 234A will not apply because he already filed a return that time. He already filed a return that time. Rahul, that time he filed an updated, he filed a belated return, which means that time he paid a 234A. That time he paid a 234A. Now he is filing an updated return. What will happen? And the return difference tax irukalla. And the difference tax belated return tax varum, original return tax varum, adoda difference additional tax pay pananum. Okay, but at any point of time, the interest on 234A will stop on the date on which he filed the first return. Will stop on the date on which he filed the first return, unless and until he never even filed a return to start with. Unless he never even filed a return to start with. Notice this. See, if the return was not filed earlier, you will have a 234A which is computed on tax as per updated return up to the date of filing the updated return. Up to the date of filing the updated return. Abdiya right ka? It says if the return was filed earlier, it is computed tax as per original return up to the date of filing belated return. Which means return munadi file panninda 234A belated return ke ninnidum. Return munadi file pannalana updated return variko kondu pogum. Okay, adu mattum da paakano. Balance everything you know. You will compute tax as per return of new and return of old. Difference of that will become additional interest. Technically speaking, it is not expected that the computation will be asked in exam. At best, they will come and tell you what is the additional tax. They will tell you what is the additional interest, and they will tell me what is the extra tax to pay. Tell me what is the extra tax to pay. You need to check if it is within 12 months or after 12 months. If it is within 12 months, it is 25%. After 12 months, it is 50%. That's all. Okay. At inter level, I'm not expecting them to come and ask you to compute the 234B, 234C, 234A. Very difficult because it is lengthy. You will have to do two computations. First original ka pannano, adukapro updated ka pannano, adukapro difference paakano. Varadu, kandipa varadu. Yes or no? Yes. So don't worry about it so much. You can be chilled about it. But yes, this might come or should come as an MCQ question. Last I remember mail vandhathu. That is what my students told me. Okay. So this may come as an again question in November. Just be extremely careful about the 25 and 50. Now notice the question very carefully. The question may come and ask you to tell the total tax to pay. or the question may come and ask you to tell the additional tax to pay. If the question comes and tells you to pay the total tax, that means the 125%, which means original tax plus 25%. If they come and say only tell the additional tax to pay, that means you'll only say 25%. You'll only say 25%. That number matto paathukonga correct. Okay, because I am very sure if they give you that question, both the numbers will be there. Okay, 125 irukum 25 irukum paathitu pottingna nalla irukum. Clear? Straightforward giveaway 1 mark question, just you get the answer properly. All clear? Everyone? Any doubts? Awesome.